Alright, welcome to, as far as I can tell, the first investing VTuber video on YouTube. You'll have to forgive the model, it's a little rough around the edges, kind of looks like a PS1 model. This is actually only the beta version of the model I'm going to be using on this channel, but I wanted to get this video out today, and actually I wanted to test the waters, do a trial balloon, just to see how this would go over. So, welcome to the first investing VTuber channel. I'm of course Eugene Chargrain. So in today's video, we're going to be talking about monthly dividend payer stocks and which ones are the best ones, because there are a lot out there. A lot of stocks out there are trying to catch dividend investors to buy into their company, and maybe they don't have necessarily the best fundamentals. So I've been investing in dividends for many years, and I've actually gone through most of these stocks, and I think I can tell you and help you get an idea of what are the best monthly dividend payer stocks and which ones aren't so good. So this is a list of my favorite dividend stocks. So the first one is Gladstone Land Corporation. So what this company does is it raises money through debt and the stock market, and gets a bunch of money together and buys up farmland in the United States and puts it together in a trust, rents that farmland out to farmers, collects income on rents, and then pays it out to you in a dividend. Right, so you can see here, it pays you a little bit over 2.5% a year, and incredibly, I have to be honest with you, I've done really well in the stock. You can't see it so much here on this chart, so we're actually going to go over to Seeking Alpha to get more information. This is Gladstone Land, and if you actually remember, those of you who are true super fans of the channel, I've been talking about this company for a year, and I recommended this company as one of the best coronavirus opening plays. And I have to admit, it's done very well for me. So if you look over here, when I was buying this thing like in the $12, $13 range, after the lockdown started in the United States, it's doubled since then. It's nearly doubled. We're talking, $12, $13, now to $21 a share. All the while, by the way, paying me a 2.5% dividend. Really incredible company. And if you look at the dividend statistics, it actually just gets better than that. So, payout ratio is 80%. So that actually means that they're only using 80% of their earnings, of their income, to pay out their dividend. So by dividend standards, that's on the safer side. The dividend has been growing a little bit over 2%, 2.27% over the past 5 years. And you can see for 6 years they've had a consistent track record of dividend growth, and of course this is a monthly dividend payer stock. But here's the kicker, here's the really interesting thing. If we go to their website, you can kind of get an idea of what they're about. As I said before, renting out farmland to farmers, sometimes buying out the farm from underneath the farmer. You can take a look, it's getting a little bit better geographically diversified in the United States. You can see here, for example, here's a list of all their California farms. Here's the thing I really like. If you look at the information for investors, they have press releases like this. Gladstone Land announces increase in monthly cash distributions. I love this kind of thing. I love when my dividends go up. So take a look here. So they're saying the dividend is increasing, but here's the really funny statistic. The company has paid 98 consecutive monthly cash distributions on its common stocks since January of 2013, and has increased its common stock 22 times over the prior 25 quarters. So that means 22 out of 25 quarters, this thing has increased its dividend on something that is so incredibly safe, right? So this is not a cryptocurrency. We're talking about farmland, right? We're talking about farmland, and I can speak for myself having invested in this. I doubled my money on the safety profile of farmland, and collected a 2% dividend. I'm going to be honest, I love this company. I've talked about it on the channel. I own it. This is one of my favorite monthly dividend payer stocks. The only thing to watch out for is that this is a REIT, so when you get your dividend payments, they're going to be under ordinary income. So if you make a lot of money, you're in a high tax bracket like we have in the United States, you're going to be paying your ordinary tax rate on this company. Just watch out for the ordinary dividends. That is standard in REITs, as you may already know. Just something to keep in mind, because obviously tax treatment is very important when you're dividend investing. But other than that, I love the statistics about this company. I love where it's going, I love where it's been, and I'll be keeping an eye on it on the channel. Now, this is going to be a really interesting one. I've actually never seen anyone talk about this on YouTube videos, but one of the reasons YouTubers always say for why they're quitting dividend investing is that, well, listen, I love dividends, but I just make too much money. I've got way too much AdSense money. My tax bracket's too high. I can't invest in dividends. I get taxed too much. I had the solution to this. Enter the Municipal Income Trust. BlackRock has many of these. We are talking about monthly payment, over 4.5% you're getting on your yield on this trust. And so what this does is, this is New York, but there are other ones as well. There's one for every state in the United States. Trust me, you can find it. It buys up municipal bonds, municipal debt, puts it in a trust, and then pays you at a distribution from the yields on those bonds that you're buying. So you're buying up municipal debt of the states, and here's the important thing. You need to buy, if you want to do this, and you want to get special tax treatment, you need to buy the municipal income trust that's the state you reside in. So if you buy one of these municipal bond funds, every distribution you get is tax-free. You heard that right. It's tax-free. So there's no excuse if you make too much money. You want nice tax-free income? Boom. You get it right here. Now, one thing to say is some states are better about paying their municipal debts than others. So New York kind of has a rough history of that. So does Michigan, and I think California as well. Even with a city like New York, and maybe your state is better, even a city like New York, which doesn't have the best history, the best track record with paying off its debt, the share price of this, ignoring the distributions you've been getting, are pretty stable, right? So they vary between $14 to $16, never dropping lower than $12, right? The share price isn't likely to crash all the way down to zero. So you're getting, especially in other states, a relatively stable share price and a good dividend. And here's the kicker. You get the best tax treatment. Distributions from this trust are tax-free. So what you do is you find one for your own state and enjoy the benefits of an over 4.5% yield, tax-free. Here's the next one I really like. This is BlackRock Science and Technology Trust, and this is one of the most interesting things I've seen yet. I've owned this one off and on for many years. If you read the website, it explains what's going on. It says, it's a perpetual closed-end equity fund, or a trust, that has an objective of providing income and total return through a combination of current income, current gains, and long-term capital appreciations. So what they do is they invest their funds in US and non-US science and technology companies and generate current income from advanced dividend yields and also private equity investments. So putting this really simply, this trust buys tech stocks and tech companies which don't really have a history of paying dividends, right? People love the growth of tech stocks, but the downside of those stocks is you don't get a dividend. This solves that, right? So we're going to go back to before. This pays a 4.67, you can see it right there, a 4.65% distribution or a yield on underlying companies that have growth potential, right? So you look at the chart, this fund is a grower. It's a grower. This does not look like your standard dividend payer that's been flat and sends out all of its earnings and income and revenue through dividends. This thing appreciates. We're talking going from $16 now to $60 just over the past 4 years. Apple, Microsoft, Amazon, MasterCard, Square, PayPal, Lam Research, Alphabet, right? That's Google. These are hot tech stocks that have been growing. So this solves one of the biggest problems of dividend investing, where you want to be involved in growth sectors but also get a dividend. And here's the really cool kicker thing. This is the biggest secret. You have here 2% of the portfolio, Project Kafka Ordinary. And so what this is these are secret private equity investments in tech companies that aren't on the stock market that you just can't get as a normal investor. So if you're thinking about like AI or self-driving car companies before they go public, you have it right here in this fund. You can see the exposure by different countries. I just love this trust, right? So this completely disarms one of the biggest controversies with dividend investing. We're like, well, you can grow your stocks more. This is a grower. It does pay a distribution, and you're involved in the growth technology sector. And here's the kicker too. So most of these distributions also are taxed as an ordinary distribution. So it's taxed at your ordinary income. But sometimes this trust does do strategic investments in companies in the direct stock of those companies, whether it be private capital or public capital, and then distribute to you, the shareholder, long-term capital gains. So those gains that you get through this trust are taxed at a long-term rate, which gives you a better tax treatment. So this is an interesting hybrid. You get growth in the share price, really solid growth, at least just based on how technology has been performing these past years. You get immediate ordinary income, and you get long-term capital gains from investing in some of the greatest. We're talking about the heaviest hitter in the tech space in the United States and also globally right now. For BlackRock Science and Technology Trust, this is interesting too. 4 years of growing the dividend. The 5-year growth rate of the dividend is 13%. That's the advantage of being in tech. And it pays you monthly. What's not to love? One of my favorite monthly payers of dividends, and not enough people on YouTube are talking about this. So next up is STAG Industrial, STAG. And if you look at this one, it's got a pretty solid performance. It's got pretty solid. We're talking 80% over the last 5 years, all the while paying a solid 4% dividend right there. And so what STAG does is, it's not like your normal real estate trust. So as you can tell, STAG Industrial invests in industrial, warehouse, that sort of thing, real estate spaces. So this is not like, your normal real estate investment trust that's trying to sell you office space or your local Walmart, right? Because we all know that in the age of Zoom and digital meetings, office spaces, retail spaces, they're not doing so great. They're not doing so hot right now. But what this invests in is industrial spaces, which are far, far, far more resilient to consumer trends. If you take a look at some of these properties, you'll get an idea of what we're talking about. You get your normal portfolio of distribution centers, which are so important in today's economy, and warehouses and other industrial spaces. Now let's take a look at the dividend statistics, because that's the real important thing. Payout ratio, I love this, 73%. This is considered a safe dividend. That said, the dividend does grow at a smaller percentage than the other stocks I've talked about, only just approaching 1%, and it only has a growth track record of just 2 years. But I have to include this because this is considered one of the kings of monthly dividends. Just keep in mind too, unlike the other ones I've talked about, you're going to be paying ordinary dividends on this real estate investment trust. So if you're in a high tax bracket, you pay a lot of tax, this is going to contribute to that. But can't argue with the monthly income. Next up, and people don't talk about this is going to be another one of those stocks where it is an ordinary dividend, so you're going to be very tax sensitive to it. But this is on the safer side, right? So this is the opposite of BST. This is PFFD, Global X-US Preferred ETF. Now, when a company issues preferred shares, these are a special sort of pseudo stock where it's not quite a bond, and it's not quite stock. They issue these shares, they usually have a dividend yield, and they're on the safer side. So if a company goes bankrupt, investors who own preferred shares are ahead of line in bankruptcy proceedings, right? So if a company goes bankrupt, the company needs to pay investors they owe debt to, bondholders, preferred shareholders, then finally common shareholders. So you can see you get better treatment in the sort of scenario where a company goes bankrupt. So naturally, preferred stocks are considered more stable and safer than common shares. So you're getting a 5% yield on this ETF. That's above some of the other ones we've talked about. It pays you monthly. And if you take a look at the performance here, it's remarkably stable. $25 in 2018, $26 today. It did go down like everything else during the coronavirus pandemic. Very briefly, I will add. But only down to $17, almost $18. You get this for the monthly distribution and the safety profile. You're just sacrificing future growth like you get in BlackRock Science and Technology. In a way, maybe these two complement each other. So if farmland's not your thing, if industrial spaces aren't your thing, if tech companies aren't your thing, and preferred stocks aren't your thing, too much paper, I guess. The last and final stock I have on this list is the company everyone points to, Realty Income Corporation. This is a real estate investment trust, a REIT, and what they do is they get you real estate in commercial properties. These properties are more retail exposed than other ones, but it is known surely as the monthly dividend company. You take a look at their portfolio, you get an idea of what's going on here. Top 20 clients are Walgreens, 7-Eleven, Dollar General, FedEx, LA Fitness, stuff like that, right? So they have done a good job, I will say, getting out of malls, getting out of real estate spaces that are going to be affected by Zoom culture, right? So Amazon is destroying retail, and also online business meetings are destroying office spaces. Some of these things aren't so great. I'm not so sure about theaters, to be honest, but gyms will never be replaced by Amazon as far as I can tell, along with grocery stores and other convenience stores. So this is a good way to get into real estate easily and also collecting a dividend at the same time. But now let's take a look at their dividend statistics. Payout ratio, on the higher side, but still safe. 83% is considered safe in dividend land. 5-year growth rate of 4%. This is on the higher side. They do a good job raising their dividends. And also, I have to admit, this is why this is on this list. This company has one of the best track records in the monthly dividend space. 24 years of dividend growth. This is why people consider it the monthly dividend king. There's a reason for it. I wanted to, in this video, give you examples of other companies that have unique tax treatments, unique strategies that you just don't hear about in other YouTube videos. So I brought these now to your attention, but also at the same time, we need to cap this off and just accept that the king of monthly dividends is, Realty Income Corporation. If you like strip malls, you like real estate properties that have tenants that aren't so exposed to being wiped out by Amazon or Zoom calls, it's a company to be in if you like monthly dividends. Of course, it is a real estate investment trust, so your dividends will be taxed as ordinary dividends. That means it's going to be taxed at your standard tax bracket. So you're not quite getting that better tax treatment, but it is one of the pillars of a monthly dividend payer portfolio. I'll throw on screen here some other monthly payer stocks that you might be interested in that are considered favorites in the industry, but this video was to highlight what I think are the kings of monthly dividend payers. If you want to get started investing specifically in dividends, I have to recommend TD Ameritrade. TD Ameritrade doesn't have the best interface, but specifically for dividend stocks, they have tools that are so powerful, like a monthly income estimator that will tell you in the future what you expect to get in dividends and which companies are giving you the best rates and the most dividends. That feature is killer. I haven't seen that in other brokerages, and that makes it really powerful if you're a dividend investor. Another thing too is, I have to admit, it's easier to track and understand what's going on. Most brokerages don't have a screen like this right here where you can see all of your dividends coming in and what kind of tax treatment they're getting. That's powerful. YouTubers don't often recommend or talk about TD Ameritrade just because there's no affiliate sign-up program. So if you sign up for TD Ameritrade, I get nothing for it. I just think it's a good brokerage platform. They have no referral program. They have no affiliate program. You just sign up, that's it. They're not looking to chase clients and get you to sign up and pay you bonuses to do so. Not that there's anything wrong with that, but I think that's the reason why not many people on YouTube talk about TD Ameritrade. The interface of TD Ameritrade isn't as good as some other brokerages, but for dividend investors, I think there's bar none. So if you do want to get started in investing, I have 2 affiliate links down in the description. When you sign up with those links, I get a tiny little kickback and you get a sign-up bonus when you start investing. For beginner investors, I recommend M1 Finance just because the interface makes sense, it's intuitive, and also it's good if you're the kind of investor who realizes, you know, I don't want to stare at charts all day. I want to get involved in investing. I want to be in the game, right? I want to collect some of those gains, but looking at charts is not my thing. I'm good at my job. I know how to make money, but I don't want to spend my life investing. How do I do this without making it a headache and having to learn a billion things? Well, M1 Finance is there for you. In just a few clicks, you can find pre-made professional grade portfolios like this Expert Pi. You just click one, 2020 aggressive here as an example. Boom, you're good to go. You have a professional grade investing portfolio with some of the top ETFs and companies out there. By far, it's the easiest way to get in investing hands-off, automate it, and have it be low stress. So if you're a beginner investor, you can click that link down in the description and start investing with M1 Finance. Now, for more advanced investors, I have to admit I've been having a lot of fun with Webull. Just the amount of information on here. If you like tracking individual stocks, if you like getting down to the details and trying to find opportunities, I got to admit, Webull is a pretty good platform. I mean, if you look at some of these charts they have available, this just isn't available on a platform like M1 Finance or TD Ameritrade. You'd have to go Googling around the internet to get this information on random websites. It's really powerful. Where in just a click like that, you can see bar charts or the balance sheet, income sheet. On what other brokerage platform can you just click around and get these pre-made graphs that you would have to make in a spreadsheet normally for the cash flow statement, balance sheet, income statement, financial forecasts? It even has really powerful tools like this one that can tell you what ETFs your stock is in, right? So here for Gladstone Land, you can see the ETFs that it's appearing in, and that way it lets you track how well your company is doing in ETFs. Because as we all know, Tesla made a bunch of money when it finally got included in the S&P 500 ETFs. So if you're intermediate or above, gotta recommend Webull. There's a sign up link down in the description. You join up for Webull, you get 2 free stocks, I get a small kickback. It's a great way to get started in investing. It's not quite like M1 Finance. M1 Finance, you sign up for that, you get $30 when you deposit $100. That's an instant 30% gain. If we're talking about yields here, as we have been in this video, instant 30% gain just for starting in investing. Recommend that if you're a beginner. For more advanced, for more intermediate, Webull. All right, thanks for watching this video on monthly dividend payers. If you enjoy the content, please, of course, leave a comment. That's the #1 most important thing. I love reading comments. That's it. I'll be really fast. See you in the next video.